On the agenda today, RAJAN completes a year as the RBI governor. We rate his performance with Jim O'Neill, Shyamala Gopinath, Sanjeev Sanyal and Tamara Henderson. With the currency in an unprecedented freefall, the current account in an absolute mess, and inflation raging out of control, RAJAN had the most hostile welcome any governor could get at a central bank. Today, as he completes 1 year in the hot seat, we take a look at the RBI governor's report card.
These are challenging times for the Indian economy, though no one can have any doubt about the country's promise. The government and the Reserve Bank are working together to address these challenges. We do not have a magic wand to make the problems disappear instantaneously, but I have absolutely no doubt we will deal with them.
RAJAN may not have a magic wand, but he has indeed proved to be the right man for the job. Since he took over, the rupee has gained 10% from its lows. The external sector has stabilized and foreign institutional investor inflows have surged. But the celebrated economist has been the first to admit that there could be immense danger lurking around the corner.
Let us remember that the postponement of tapering is only that, a postponement. We must use this time to create a bulletproof national balance sheet and growth agenda which creates confidence in citizens and investors alike.
The battle against inflation continues to be an uphill one. Even as he's on track to meet the 8% CPI target by January next year, many predict that inflation will rise once again when the favorable base effect vanishes. And that means Rajan may not be able to support Prime Minister Modi's growth push with lower policy rates anytime soon.
We're not against growth, but we do think that growth will be most benefited if we disinflate the economy and we don't have to fight this fight again. Let's fight the anti-inflation fight once and let's win, and that will create the best conditions for sustainable growth. And I think the government, which has a long-term a long horizon in mind, given that we just had elections, is on the same page that let us bring inflation down. Of course, government has its role cut out. We have our role cut out.
The RBI governor has also joined the government in its war against falling asset quality and willful defaulters. Rajan has also made significant headway in developing the financial system by granting in-principle approval for banking licenses to IDFC and Bandhan Financial Services in April. Bureau Report, Bloomberg TV India.
All right, to discuss the RBI governor's big hits and misses in the past year, I'm being joined this morning by Jim O'Neill, former chairman at Goldman Sachs AMC and columnist at Bloomberg View, Shyamala Gopinath, former deputy governor at the RBI, Sanjeev Sanyal, global strategist at Deutsche Bank AG, and Tamara Henderson, economist at Bloomberg. I will also be joined by a team of reporters, Saloni Shukla and Agam Vakil. Saloni, let me come to you first. You've been tracking the governor closely since he joined office last year. Let's break down his actions for us. We've seen a lot of activity on the economic front, and he's been waging a war on inflation as well as streamlining monetary policy. Take us through the highlights.
Well, I want to begin with, as far as inflation is concerned, like he mentioned and like we heard him, he said that let's fight this fight for once and for all and win as far as the fight against inflation was concerned. So what has he done so far? When he joined, we were at about 20% food inflation that was galloping. Now we are en route to meet the 8% CPI at least by January 2015. But the ball is now in the 2016 court because the biggest target to achieve right now is the 6% CPI target by January of 2016, and whether or not inflation surges past March, because that's the time when the seasonal inflation kicks in. So that's big concern. As far as the Urjit Patel committee report, We are already targeting CPI inflation, but as far as sovereign fixing inflation target, RBI is still in preliminary talks with the government and bring them on the table as far as the entire inflation targeting policy is concerned. So that is largely on what he has done on the inflation front. He stood his ground when corporates and the markets have called in for rate cuts, and clearly saying that inflation remains his one key sole agenda. As far as fiscal consolidation is concerned, since the time he's joined, he's clearly asked the government to go ahead and put in place a plan for fiscal consolidation. Arun Jaitley has stuck with the 4.1% fiscal deficit target, and the commentary coming in from the RBI governor clearly is that the government has to focus on increasing revenues so that we are able to meet that 4.1% fiscal deficit target that the government has set for himself. So largely inflation being the key agenda, but like he mentions, he's not against growth, he's just fighting the inflation fight.
All right, let me also bring in Jim O'Neill, former chairman at Goldman Sachs AMC and columnist at Bloomberg View; Shamala Gopinath, former deputy governor at the RBI; Sanjeev Sanyal, global strategist at Deutsche Bank AG; and Tamara Henderson, economist at Bloomberg. Jim, let me come to you first. How would you rate Dr. Rajan's first year? How successful do you think he's been in stabilizing the external sector, the currency, and cracking down on worrying issues like bad loans?
Well, it's very difficult to separate his influence from other influences on Indian markets, whether they be external or, of course, the excitement surrounding the new government led by Prime Minister Modi. But I think he's definitely played a positive role. Somebody I've met in the past, he has great credibility, and he has led the central bank in the right way. But it's very hard to separate his influences from what have been two other very positive influences also.
Okay, Jim, so what about monetary policy? He has from the onset had a clear stand on being communicative and the policy being an evolving one when it comes to rates. His first priority has been inflation, which continues to be stubborn, and he's stuck fast on rates despite pressure from the government. What's your take on the tone of monetary policy so far?
You know, I think I was surprised that the recent developments in Indian inflation, they were higher than I thought they would be. So given how important it is, particularly for low-income Indian people, to have stable and low inflation, I think Rajan's stance is correct. It's unfortunate because it would be nice to see lower interest rates in India, but unless inflation can be reduced, which is partly why I say it would be good to give the central bank independence, full independence, I'm not sure there's anything else we should expect. I'm sure once he feels more comfortable about inflation coming down, we would see lower interest rates. But in the meantime, you have to be very cognizant of that.
Ms. Gopinath, let me put that question to you as well. Increasingly, there has been a clamor for a rate cut, but the governor has stood his ground. Do you think to some extent he's been boxed into a corner? What more can the RBI really do at this point in order to tame the inflation monster?
The way to handle this is to have a monetary policy framework that emphasizes on measures which will help, contain inflationary expectations. And it's not as if, the whole process is very mechanistic, and it's not that one has to react to every single inflation number that comes in. So in a way the RBI has approached the whole issue of managing inflation expectations and growth in a very balanced manner. And clearly it's not just interest rates that matter, because in an inflationary situation, higher interest rates will only lead to will at least contain some demand. There is need for both demand management at the same while dealing with supply pressures. So it cannot be that you deal with supply pressures and you have the answer to the problem of inflation, because supply measures do take time, and in the meanwhile it's important to also look at the demand. And it has been done in a very calibrated manner, and by giving guidance to the market. So I don't think that it is just the monetary policy that is coming in the way of growth.
Fair enough. Sanjeev, let me bring you in here as well. I also want to get a sense of, the target for inflation, how realistic you think that is, or how difficult you think it's going to be to bring it down. They're also looking at recommendations from the Urjit panel report on targeting CPI as the anchor inflation. Preliminary talks are on the right of the sovereign also to fix inflation. There are worries that inflation will inch up by early next year with the benefit of the base effect gone before it begins to come down. What are you anticipating in terms of inflation, and when we'll actually start to see that worry receding?
I think Governor Rajan has done a fabulous job by keeping monetary policy tight. When he took office, you had the rupee weakening, inflation spiraling out, and growth slowing all at the same time. So he took the risk, tightened monetary policy, which is the right thing to do if you have to choose between stabilizing inflation and reviving growth. Then it's always good to first kill inflation before doing something about growth. So I think he did the right thing. I think going forward he should keep monetary policy tight as long as inflation remains high. It has stabilized and come off a bit, but it's still very high. And I think in order to anchor it at a much lower level, he has to hold this tight monetary policy a bit longer. When it comes off, and I think you will see it coming off towards the end of the year or beginning of next year, then I think there will be an opportunity at some point to cut rates by a long way. But he's right that doing one big fight against inflation is the right thing to do, especially since as I have argued over the years, India's inflation problem comes not from demand side but from the supply side. And so he really has to wait for Prime Minister Modi's supply side measures to filter through. So once that happens, and hopefully in the next 18 months to 24 months, you will see much of the supply side finally getting freed up, then there will be an opportunity to do huge interest rate cuts, maybe hundreds of basis points. But there is no need to hurry about it.
Fair enough. No need to hurry at this point. Inflation is, of course, the top priority. Tamara, let me bring you in here as well. Dr. Rajan has also emphasized on a constantly evolving policy. He has said that all factors will be taken into account, and even if at this point in time it doesn't look like a rate cut is in the offing, if things change, you never know. Given that context, how soon do you think it's reasonable to expect a rate cut coming in?
Well, central banks never want to tie their hands, so they always want to give themselves leeway to go up or down, depending on what unfolds ahead that might be unexpected. I agree with my colleague on the panel that it's a little bit early to talk about rate cuts. We do have actual structural inflation at work, the supply side impediments, and if we see some policy coming through from the government on a national VAT, that could actually help reduce these bottlenecks that keep the price pressures high. So if we see this VAT coming through next year, we may be seeing these cuts by the end of next year. That would be a guess of mine.
All right. The other big factor, of course, that we are tracking in Dr. Rajan's tenure so far as the RBI governor has been the stabilization of the currency. Let's take a very quick break. When we come back, we continue the discussion and take a closer look at how markets and the rupee have fared over the last year. Back in business in just 2 minutes. Welcome back. You're in business with me, Abha Bakaya. It has been a year since RAJAN took charge at the RBI, and since he took over, inflation has cooled, foreign inflows have spiked, and forex reserves have surged. The rupee too has appreciated significantly. So how have markets fared since Rajan took over at the Reserve Bank of India? To discuss this, I have with me former chairman at Goldman Sachs AMC and columnist at Bloomberg View, Jim O'Neill, Shamala Gopinath, former deputy governor at the RBI, Sanjeev Sanyal, global strategist at Deutsche Bank AG, and Tamara Henderson, economist at Bloomberg. My colleague Agam is also joining us to take us through the performance that we've seen on markets and the currency. Agam, just first take us through the numbers.
Well, there's no doubt of the fact that the markets have done quite well since Raghuram Rajan took over as the governor of RBI. As a matter of fact, just about exactly a year from now, about 4th of September 2013. Since then, we've seen the Nifty move up around 52%, Sensex also up 49%. The BSE BankX clearly performing the benchmark indices up as much as 83%. Let's also take a look at some of the stocks which have done really well. We have good performance from Axis Bank up as much as 165%, PNB also up 135%, with good gains coming from Maruti L&T as well as BPCL. But to take a closer look at how the banking space has done, let's take a look at private banks. We've seen substantial gains coming in from the mid-cap banking counters like Federal Bank up 174%, Yes Bank also up 172%, with good gains coming in from the front runners like Axis Bank as well as ICICI Bank. To take a stock of the PSU banks as well and how they've done, we've seen good gains there as well, where each of these four banks that you see right now have almost doubled, and when it comes to Punjab National Bank up as much as 134%. So needless to say, the banking index as well as the banking counters have done rather well over this course of the year. To touch upon the issue of the rupee, as a matter of fact, you can see from this chart, well, this was on the 4th of September when Raghuram Rajan took over as the governor. We've seen a sharp decline in those 2 or 3 days. The rupee was at around the mark of 68, and since then we've seen a significant depreciation of the USD against the rupee, now down as much as around 10.5%. So once again, the rupee has also benefited from this year, 1 year in with Rajan.
All right, Agam, thanks for that. Let me get back to our experts. Jim O'Neill, Shyamala Gopinath, Sanjeev Sanyal and Tamara Henderson are all still with us. Jim, let me come to you on this first. If we take a look at the currency of the year, as we just did, Rajan has managed to stabilize it. When he took over, of course, it was in a downward spiral. He's also been talking about internationalizing it to some extent. Would you say the worst was over for the rupee?
Well, I'm still kicking myself because just before he was announced, I was actually very close to purchasing an Indian rupee call option myself, because it seemed so obvious that it would rebound, because I believe this fragile 5 stuff that India was being affected by was not really relevant. But when he was announced, it was quite obvious to me that the rupee would recover. But again, as I said with your first question, particularly in the past 2 or 3 months, with the new Prime Minister leading a stronger government, that is having a positive influence as well. And as you look at the latest balance of payments data, it shows very strong capital inflows. And I think if Rajan carries on the way that he does, and Modi pursues the line he is doing, and Indian growth improves, the rupee is the biggest problem he's going to have is stopping it rising too much.
Sanjeev, he's also to some extent lifted investment restrictions, built those forex reserves as well to arrest that sharp fall in the rupee. In terms of the impact on this, both on the currency and in terms of investor sentiment, what would be your take, and what more would you be looking out for at this point?
Well, I think the key thing here is that you have an exchange rate that may come under some pressure to appreciate from here on because of capital inflows. But I think the correct response to that would be to hold the rupee from of significant appreciation for many reasons, not the least that Prime Minister Modi has announced an economic trajectory which will, manufacturing exports will be a very important part of that. That requires that you keep the exchange rate as competitive as possible. And in fact, if Prime Minister Modi has his way, he'll be opting for a very East Asian style growth model, which in every single case was predicated at least partly on keeping an exchange rate weak. Now, that may mean that Governor Rajan will have to be prepared to accumulate huge amounts of foreign exchange reserves. And I think he is prepared to do that. I mean, a country like India having 500 to 600 billion in reserves is really not a big deal. It can be easily sterilized. So I think keeping the rupee range bound in roughly where it is now is perhaps the right option for the time being.
Right, Ms. Gopinath, still 2 years to go, of course, for Dr. Rajan. 1 year is very little time if you think about it in the overall context. But what do you think are the 2 or 3 things that should be at the top of his mind at the moment?
I think one is many of these are already in the RBI's mind, but clearly more definitive policies are needed. One is on the asset quality and on the need to deal with the non-performing assets, particularly of the infrastructure assets, and one has to come up with some ways in which the current block of infrastructure assets that are with the banks are handled. There have been suggestions of bad bank and good bank, or transferring these assets to asset management companies. Not too sure how this will help, because ultimately we have to resolve the fundamental issues, and subject to that, if these issues are resolved, I'm sure the banks themselves can manage these assets. But still, I think in the area of asset quality, there is need to do a lot more.
All right, we'll leave it at that. Thank you for joining us. That was Jim O'Neill, Shyamala Gopinath, Sanjeev Sanyal and Tamara Henderson with their perspective on Raghuram Rajan's performance at the RBI over the last year. Time to take a quick market check. Priyank is standing by with more on the movers and shakers.